There are core economics to what is going on right now. What is your singular concern about the unilateral actions of the President of the United States?
Well, I think the most important implication of the policy as well as the rhetoric by the President of the United States is creating an uncertainty about what kind of mechanism internationally and globally in terms of how country can discuss and even in this case agree when they have a dispute. I think the degree of uncertainty is the one which is costing a lot in the form of uncertainty of mechanism of the dispute settlement, especially when we are talking about trade. But this is also something which actually creating a downside risk even more. When we enter 2018, we actually quite optimistic about the global economic situation. But then in 2018, the first quarter creating quite a lot of uncertainty, not only in the form of trade, but also in the form of the Federal Reserve normalization. So we, in this case, are very much concerned that many countries, especially emerging and developing countries, cannot adjust well enough or fast enough with this kind of environment that they are facing. And that can create an environment for the global economy to have a downside risk that will be materialized. This is something that really a challenge for many countries that they hope that they can actually create a progress in their own economic development by having a global trade as well as improving in terms of their own domestic policy in order for them to be able to create a prosperity for all.
If we look at Indonesia and the sheer mass of the people of Indonesia, if we look at the Malaysian Peninsula, we look at the cultural history of dealing with the Chinese, how do you expect Indonesia, Malaysia, Singapore, Vietnam, and the others to react to a new China given what America is doing?
Well, first, the relationship with the China is actually evolving when the China is becoming more and more powerful as the economic size, second largest in the world. And they're actually also creating both trade as well as investment that create a both positive in many developing countries who export both raw material or, in this case, intermediary good to the China. And that creates not only for the ASEAN, you mentioned, Tom, in this case, but also many developing countries in Africa, Latin America. They are actually enjoying this commodity boom. If you remember, after the global financial crisis 2008-2009, many emerging countries actually can survive from this global financial crisis because they, at that time, also enjoying the commodity boom and continue supplying or exporting to China. And at the same time, China is also expanding through their investment by building infrastructure as well as investing in many developing countries. There is a certain concern at this moment regarding the exposure of the foreign debt by many of developing countries, which is, I think, being discussed in the IMF and World Bank. But China definitely, in this case, is a player who changed in terms of their policy to engage with global economy. With many developing countries, they are engaged in trade, investment, and even in this case, when we discuss about climate change, they actually become a very active player. So this is a very welcome. Of course, if we have, and I think for China to become a global player, they know that they have to be able to show the leadership which is consistent with what they are doing. And I think this is one of the good examples of how we are going to be able to create what you call it, a player in the global economy in which all will abide with the rule and they're adjusting from their global, their domestic policy into more global policy. When your size of the economy is getting bigger, then you are expected to become a leader and a global player, which is actually behave according to the global rule. And this is exactly what I think China is trying to show. And that is actually creating quite a lot of good benefit for many countries. But of course, there is also a concern regarding if China is going to dominate. And there is always also, in this case, some of what you call it ethnicity, which maybe for some countries is going to be very sensitive. But this is going to be changing a global environment in which China is going to present themselves to become a global player. And many countries have to adjust with that.
Minister, you've been on the East Coast of the United States. You've been talking to bond investors there. You're here in London. You're talking to bond investors here. While you've been on this trip, your markets at home have been closed. But in that intervening period, we've seen the Fed step up, deliver a rate hike, talk about more rate hikes coming. We've seen the ECB talking about walking away from its QE program. Emerging markets, as a result, have had a fairly tough time during the intervening period. Your markets reopen later on this week. When you talk to those investors, did you have to convince them to hang on in there? What are they telling you about their desire to continue to hold Indonesian bonds and Indonesian assets? Did you have to be particularly convincing this time round to make sure that they stuck in there?
I think that's really a good point. First, that many emerging countries prepare that the normalization of the monetary policy here in the United States, or not the, there in the United States. I was in New York yesterday, and also in the ECB that they are gradually is going to then becoming normal, or in this case reducing their liquidity support by central bank. I think this is something that already communicated for quite some time. We remember 2013 there is a taper tantrum when they just announcing it. Now they are doing it. Last year Indonesia, with the 3 times increasing rate by the Federal Reserve, we actually stay calm and continue stable.
Do you feel calm now?
Well, this quarter, it's not only Indonesia, many emerging countries adjust to this more hawkish, or at least they're saying that they are going to increase more than 3 times. It's become 4 times. And that is going to be something which is going to happen. So many developing countries, emerging countries, have to adjust with this normal, new normal. I call it new normal. Some people call it old normal, in which the world is going to operate with a less liquidity, with a higher rate. What does it mean? I mean, for Indonesia, because our fiscal policy has been guided by a very prudent principle, our state finance law is not allowing us to have a deficit more than 3%. In fact, in this year, we are going to have 2.19, which is much lower than last year, 2.5. So when I discuss with many bondholders, what we actually present to them is that fact about Indonesia as an emerging country with a sound macro policy, both fiscal and monetary policy, and we want to achieve higher growth, but not to what we call it easy policy, like expanding fiscal deficit, monetary policy which is easing, but we are doing it in a hard way by reforming our investment policy, by building infrastructure. So it will create more better productivity, better business environment, better doing business indicator.
When you walked out of the room, did you get the sense that they were going to stick with you? Or do you think that there is this approach to EM now from US investors and maybe investors here in London that they're saying, you know what, we're done. The flows out of emerging markets are dramatic at the moment. Well, you're being caught up in that.
I think, yes. The most important in this case for a country like us is try to discriminate. There are many variety of emerging country in this case. There is a country which is maybe facing a serious problem like Argentina, or a country in which we've seen their policy has been actually meddling with many different policy objectives. Indonesia presenting ourselves as a country which is well-governed, good managed, and sound policy. I think this is a signal that we would like to present to many of the investor and bondholders.
Minister,
and that is maybe something that will anchor us more stability. We cannot prevent totally.
Minister, you have a huge remit and a huge sense of history on this region. How are we prepared for the exogenous shocks where EM has to relive another 1998? Are you better prepared now for a 5 standard deviation currency move?
Well, first, Tom, 1997, 1998, many of the countries in ASEAN has a totally different situation. First, exchange rate was fixed at that time, and that's why they cannot become a shock absorber. Change now in which all of them is actually adopting more flexible exchange rate. Current account deficit Indonesia maybe still have, but it's much less than even what we call it the psychology level of 2.5. We are actually more 1.5% current account deficit.
Right.
Some other country like Malaysia, Thailand is actually have a balance or even surplus.
I'm going to give you, Minister, I'm going to give you high credit for the stability of the Indonesian currency over the last number of weeks. It's been actually remarkable to see that leadership by you within emerging markets. What is your to-do list to get through these trying times, particularly on trade? What is the Indonesian distinction to get through 2018?
Well, first, I think we are going to make sure that the fundamental of the economy is going to be consistent with the performance of the economy itself. So we are not going to create what we call it cosmetic performance, but really a performance based on our structural strength. And this is what the government is trying to do. First, on the macro, we are now knows that emerging countries, all exposed by this Federal Reserve and other central bank governor policy, as well as the trade and fiscal policy by advanced countries, including the United States. That will change the dynamic of the environment that we have to manage. So with that kind of situation, stability is important, meaning fiscal policy is going to be designed with a less deficit so that we are not going to be exposed easily, as well as monetary policy, which is going to be what central bank governor is saying, that front loading much more ahead the curve, so that we are going to create more stability and confidence.
Well,
Second one, we are going to increase growth through our structural policy, improving investment policy, creating a better business environment, so both domestic and international players will see that Indonesia as a big market is a potential for them to come to Indonesia with a fixed investment.